restriction related to social distancing and travel restrictions during the entire of Q1 and most of Q2 has been a write-off. Despite of sequential improvement subsequently, industry continues to suffer from very weak business travel and near complete ban on international arrivals. ICRA currently has a negative credit outlook on the sector and expects the industry RevPAR for financial year 21 to be lower by around 70 to 75% as compared to last year. Since the beginning of the pandemic, this sector has witnessed highest proportion of negative rating actions and also relatively higher proportion of entities looking for loan restructuring. This is also one of the very areas where our forecasts haven't moved up since Q1 or Q2. We haven't yet had any positive surprises, unlike in some of the other sectors where we have seen some elements of recovery, even if on a limited scale. The hospitality industry continues to remain under stress. To discuss the outlook for the hotel industry, we have with us our special guest, Mr. Dhruv. He has over 22 years of experience and he leads Hilton's business developments in India. Mr. Dhruv has extensive experience in developing the franchise of Marriott in South Asia and Vietnam and has been in Hilton India since last couple of years. Today, we hope to learn from his wealth of international experience. Welcome, Mr. Dhruv, to our webinar. We look forward to your engaging discussion on the sector.
Thank you, Subrata.
From ICRA, we have with us today our sector experts, Pavitra and Vinuta, who are the author of our sector research reports, and they also monitor ICRA's rated portfolio. ICRA currently rates 68 entities in the sector. We will start with a presentation on ICRA's industry outlook from Vinuta, which will be followed by a moderated Q&A session, where Mr. Dhruv would share his views with us. I now request Vinuta to start the presentation.
Good evening, everyone. Am I audible?
Yes, Vinuta, go ahead.
To set the ball rolling, let's start with a poll. Can we have the poll, please? When do you see the industry returning to pre-COVID RevPARs? To give a context, it was about 3,800 to 4,000 rupees on pan-India basis in FY20 and about 600 rupees for 7 months FY21. The options are H2 of FY22, FY23, FY24, and FY25, requesting all of you to record your response. We will give you the results at the end of the presentation. Moving on to the presentation, we will first discuss on the operating metrics and demand dynamics, and then move on to how this translates into financial performance, supply pipeline, and investments. We will also cover ICRA's rating actions in the hospitality industry. Before we get into the recent trends and outlook, let me take you through what has happened in this industry over the past several years. The industry witnessed a brief down cycle in FY 2002-2003, followed by a long upcycle from FY 03 to FY 09, hit the great financial crisis, and then went into a prolonged down cycle till FY 15. The 2008-2009 peak rapidly cooled into a deep trough, impacted by disruptive geopolitical and economic shocks that curtailed travel. The down cycle continued for much longer than the previous cycles, stretched by oversupply, leading to demand getting spread thinly across the huge base. While exogenous shocks are often triggers for the start of a down cycle, even in their absence, the cycle goes through a natural oversupply triggered down cycle. RevPAR started inching up in FY 2015, predominantly driven by rising occupancies. While ARRs also inched up, the rise was sub-inflation, resulting in inadequate profitability growth. The improving performance of the hotel industry in calendar year 2019 was followed by a fairly positive start for calendar year 2020 in Jan 2020, but the situation completely changed by March 2020, and FY21 will be the deepest decline in recorded history. This chart gives you a perspective on the lockdown timelines. Only about 1/3 of the hotels were open in April and May 2020, with demand coming from medical and other frontline workers, standard travelers, and work from hotel guests. Despite easing of lockdown in the recent months, and most hotels having opened, the rising COVID-19 cases and zonal lockdowns and curfews have resulted in negligible discretionary travel. The demand in Q1 of FY 2021 was largely limited to the Vande Bharat repatriation travelers, medical and other frontline workers, standard travelers, and work from hotel guests. In the recent months, demand has come from staycations, drive to leisure, and social MICE. Pan-India occupancy is estimated at about 16 to 18% for 7 months FY21, down from about 64 to 65% in 7 months FY20. The demand slowdown and rates controlled by the government for Vande Bharat traffic and medics have impacted ARRs in 7 months FY21. While ARRs have picked up sequentially in September and October 2020, with some improvement in demand, it remains significantly lower than the FY20 levels. 7 months FY21 has witnessed an all-time low in RevPARs. Sequential improvement is expected over Q3 and Q4 FY21, but contingent on the spread of the virus. Moving on to the individual markets, Goa has been the best performing market with over 50% occupancy in October 20. Pune and Bengaluru, largely dependent on business traffic and FTAs, have been the worst performing markets. Wedding markets such as Jaipur and Udaipur have seen some traction in demand. Drivable leisure destinations such as Coorg and Ooty in the south and parts of Rajasthan in North India like Jaipur have fared better. ARRs have been significantly lower than the FY20 levels across cities in year-to-date FY21 and are likely to remain so over the next few months given the muted demand, barring some traction in leisure destination ARRs in December 2020 because of the holiday season demand. The industry witnessed a marginal reduction in degrowth in Q2 FY 2021, with the YOY degrowth reducing to about 75% from 85% in Q1, with the opening of interstate travels and hotels being allowed to operate. The margins were deeply in red. The industry has pegged its hope on the start of a recovery in Q4 with the vaccine rollout. Hotels enforced sharp cost control in Q2 of FY21, including a 39% reduction in employee costs during H1 of FY21, letting go of contract employees, enforced pay cuts, and mandatory leave encashments. Overall, costs shrank by about 54%, while revenues fell by about 80% in H1 of FY21. Interest costs stayed largely sticky though. In H2 of FY21, the industry will witness a sequential growth in revenues while staying deeply negative at over 60% of the previous year levels. Strict cost controls will continue while interest costs balloon. Several large hotels have shored up liquidity in late Q2, borrowing through incremental debt. Moving on to our forecast for operating metrics, ICRA expects the FY21 Pan-India RevPAR to decline by about 70 to 75%, impacted by the lockdown, travel restrictions, and safety-related concerns because of the virus spread. Discounting in the market is inevitable with such a drastic fall in demand. While the consensus on a sharp correction in RevPAR holds true, the extent of decline is contingent on the timelines tied to the pandemic and hence can witness revision in the coming months. Recovery to pre-COVID levels will take about 2 to 3 years. International tourist arrival decline due to the COVID-19 pandemic is expected to be far steeper than the previous crisis. This is the first time travel restrictions have been imposed globally. According to the UNWTO, the industry witnessed a loss of about 700 million international arrivals and about $730 billion in export revenues from international tourism. This is around 8 times the loss in international tourism receipts recorded during the global economic crisis in 2009. Asia Pacific was the hardest hit region in calendar year 2020. Rebound in international travel is expected in Q3 of calendar year 2021 with travel restrictions, slow virus containment, and low consumer confidence acting as barriers. About 20% of the opinions also suggest that it could rebound only in calendar year 2022. Specific to India, There was a 75% YOY decline in foreign tourist arrivals ex-Bangladesh into India in 10 months of CY 2020. In the domestic segment, which contributes to over 70% of the guests for Indian hotels, long-haul travel is expected to stay muted, at least until H1 of calendar year 21. In terms of trends, diversion of outbound leisure travel to domestic tourism is a positive. Places like Kerala, Goa, Jaipur, and Agra are likely to be key beneficiaries. Drive to leisure, staycations, social MICE, and alternate revenue streams such as F&B takeaways will continue to drive revenues for hotels. Properties with affiliated strong brands and in the luxury segment will benefit from the increased hygiene consciousness and skew towards leisure travel. Hotels and cities depend virtual. And lastly, group bookings and corporate MICE will take the longest to recover. ICRA expects the industry sample to degrow by about 65% in FY21. Despite several measures taken by companies to drastically cut costs, the industry is likely to report massive operating and net losses in FY21, wiping out the cumulative profits over the past 4 years. As against expectations of a more gradual recovery in FY22 and 23, ICRA now expects a sharper pickup in FY22, given the evolving pandemic management situation globally and in India, as emergency vaccine authorization starts the ball rolling on effective control of the pandemic. While this is still a few quarters away, sentiments are expected to improve in the coming months. Nevertheless, the situation is still evolving, with numerous headwinds as seen with the restart of crowd control and lockdowns, with increase in COVID cases in India and globally. Debt coverage metrics are expected to sharply deteriorate in FY21, owing to the massive operating losses and high interest costs. With a large number of companies having opted for moratorium and others borrowed incrementally for long-term liquidity, debt levels in the industry are expected to increase sharply in FY21 and early FY22 before starting to reduce. Return on capital employed, or ROCE, which even pre-COVID was sub cost of capital, was earlier expected to improve from FY21 onwards. However, with the recovery currently a few years away, ROCE is expected to remain sub cost of capital until FY25. Impacted by low occupancy in existing hotels, ICRA research expects the industry capex also to moderate. This slide shows the rating movements in ICRA's portfolio. ICRA has downgraded 11 companies in the year-to-date FY 2021, triggered by sharp deterioration in performance following the pandemic. 74% of ICRA's portfolio of hotel cases have a negative credit outlook as on date, as against 4% pre-COVID. Given the tight liquidity and uncertainty on demand, construction activity in FY21 will be muted, pushing back spending by about 12 to 18 months. Further, projects in the initial stages of planning could be cancelled or deferred. On key takeaways from the presentation, demand recovery pattern will be different from other crises. Recovery to pre-COVID levels will take about 2 to 3 years. Despite sharp pickup in RevPAR in FY22, it will be at a steep discount to pre-COVID levels. Losses are expected over at least the next 2 years, and liquidity is critical to tide over the long down cycle. Overall, credit profile has significantly weakened, and about 70% of the entities saw negative rating action post-COVID. With this, we conclude the presentation. Can we have the poll results, please? Pavitra will now take over for the Q&A session with Mr. Hoon, post which the floor will be open for the audience Q&A. Request all of you to enter your questions only in the Q&A box and not in the chat box. Over to you, Pavitra.
Thank you, Vanita. Interesting poll results. 41% of you expect a recovery in FY23, but there are about 32% who do expect a recovery in the second half of FY 2022. Thank you for joining us on this call, and thank you, Mr. Hoon, for joining us for this discussion.
Thank you
To
for having me here, Pavitra.
Thank you. To begin with, sir, when do you see a sustained recovery happening in India and globally? And can you help us by drawing a parallel between the recovery in India and other global countries, particularly in China?
Well, I think, like we saw the poll results, I think majority are hopeful that in the next 2 to 3 years, there will be significant recovery. Obviously, nobody saw something like this coming, and nobody was prepared for this kind of an event where, despite the willingness to travel, there was just no way to travel because of all the restrictions. But having said that, I think to your question about recovery, we have seen that at least globally and in Asia Pacific, China, which was the first country to have got impacted by COVID-19, also happens to be the first country to show very good signs of recovery. So yes, Asia Pacific as a region benefits by the trends in China. And if you were to look at the first 9 months, which is January 2020 until September 2020, we see that Asia Pacific as a large region is at about 40% occupancy, largely being driven through China, which is somewhere around low to mid 40s in terms of overall occupancies. I think one of the regions which is likely to be the last one to recover seems to be Europe, based as per what we are witnessing there. Within Asia Pacific, also we have seen some of the countries which have begun to show signs of pickup. Japan and Korea has been doing fairly all right with the domestic demand. Again, around the mid 30s number. Australia a little bit, mid to low 30s in terms of occupancies. Southeast Asia depends a lot on international arrivals. So we'll see where it goes, but not too bad. It's just trailing behind China. In India, where we have not as many as international arrivals boosting the demand, we are seeing that hotels across, being a city hotel could be anywhere at 18 to 20% occupancy, but resorts, like you mentioned in your presentation, are 80, 85% in places like Goa right now. So overall in India, we are still seeing 30 plus percent occupancy countrywide. But we do hope that these trends are going to improve in the coming months.
You mentioned that China is at about 40% occupancy. When did China move? How soon did China move from purely depending on leisure to moving into business travel also?
So China, interestingly, when the rest of the world was getting into lockdowns in March and April, uh, in the first half of the year itself, we saw that China started showing, green shoots of recovery, and then China, it's just not leisure; it's also the corporate and small group demand that is picking up. I was listening into a presentation earlier today from STR, and it seems like there are markets like leisure markets in China, like Sanya, which are doing exceptionally well, probably even better than 2019. I think a very different kind of a scenario there. Obviously, it's all domestic demand, but China really recovered very, very quickly as compared to the rest of the world. So, like I said, that I'm only talking about the first 9 months, which is until September. Low 40s to mid 40s, and probably it's even better now by the end of the year. That number should be sitting much higher than that.
Right. All right. Do these divergent trends in the pickup lead to any changes? Could these lead to any changes in business plans for international majors in India?
Sorry, could you say that again?
Given these divergent recovery spanning out in various parts of the world, do you see this leading to any change in business plans for international majors in India?
Yeah, I mean, all hotel companies across the world have had to adapt to the changes, and nobody expected something like this to happen. But I think a couple of things that it has changed in business plans is to ensure that hotels are a safe place for guests and for associates. and really to look at costs as much as possible, and to ensure that we are innovative with our income streams to keep the hotels afloat.
Okay. How has hotel construction in the Indian market fared since early 2020, given that operators like you yourself are engaged early on in the supply planning? And do you see a lot of supply creation getting deferred or cancelled in the next 1 to 2 years?
Yes, I think there will be an impact in terms of new supply, and there has been a slowdown as far as we see new build or greenfield hotels, as we call it. And that, of course, has happened because of all the distraction in the market. All large major hotel companies typically are in the management or the franchise business, and we depend a lot on third-party owners to build hotels, to invest in hotels. And obviously, if their core businesses have been impacted due to the changes in the economy, that does have a direct bearing on how many new hotels can be signed up. But having said that, I think for us, anybody in development would tell you that it's a very long-term sort of a horizon that we have. Typically, development cycles are long. We are all looking at 20 to 25 years out in terms of markets. So in the long term, we still feel that the fundamentals of the industry are strong. There will be new hotel development. There will be people who will be traveling, and there will be new destinations that will require more hotels. There are about, I think, 50,000 rooms in the branded supply in India. And I think there will be some hotels which will probably never come up because they were still at the planning stage, and they may those ideas of building those hotels may just get abandoned forever. Uh, but I do think for hotels which are already under construction, most of those hotels should open. There will be some delays that have been caused due to the impact of the lockdowns and the labor issues. So there will be some delays that one can expect, but a majority of those hotels in the pipeline should still open.
Okay. Right. Also, again, in the context of what's happening in the market right now, how are new hotel signings happening? Are you witnessing brand conversions? I mean, does COVID set the stage for more conversions or more flagging of properties?
Yeah, I mean, certainly, this is a great opportunity for independent hotels to really consider if they would like to get affiliated with a large brand. And we've seen that in the past, in 2009 during the crisis. Just one of the outcomes of that was that a large number of independent hotels in the West and Europe and in the US got affiliated to large brands, really to get the benefit of the large distribution of those systems. And probably this is a great opportunity for independent hotels to see which brands they should get affiliated with and get the same benefit and be competitive in the market. So yes, I am sure all brands and all developers right now are looking at potential hotels that are independent and can become part of our system. A, because it's going to benefit those hotels, and B, in the absence of too many greenfield opportunities, we can get those hotels to become part of our system very quickly.
Right. Okay. Moving on to the demand front, to what extent, I mean, we spoke about the lack of corporate and their large big box MICE events. So to what extent can the lack of this kind of demand be filled up by demand coming from leisure, social MICE, and the MSME travel, which we are seeing now?
Yeah, I mean, if we really look at, and I think you covered a bit in your presentation as well, the trends since March or April 2020, hotels got absolutely empty at one point, and there were hotel closures, and slowly, hotels across the world and in India adapted to new segments. So it was the quarantine business to begin with. Then it was really accommodating the healthcare frontline workers. Then the business continuity teams of various other companies. Then there was, a pickup of essential corporate demand. The leisure moved up slowly. Small weddings started to happen. And gradually we are seeing that the rest of the corporate demand is also picking up slowly and steadily. So I think the industry is really adapted to whichever segment they could go after, depending upon what was the need. But some have been very innovative. Some, I guess, hotel companies across the world have looked at letting out hotel rooms as workspaces, which was something new that has come out of this crisis. So I guess we will get back to leisure fairly quickly. Probably the last segment to recover would be MICE, which is understandable because of numbers. So yeah, leisure, small corporate demand is going to start showing signs of growth fairly quickly. And large groups, large events probably will be the last ones to recover.
Okay. And what would implications of the lack of all these big ticket, big volume demand and the foreign travelers too on pricing power in the industry?
I mean, you mentioned in your presentation, there has been a huge impact on the demand and the ADRs and the resultant RevPARs, which are significantly lower than what it was a year ago. Uh, International travel may not resume anytime quickly, albeit there has been some air bubble and there is a small amount of traffic coming in, but I don't think people will travel until and unless they feel safe enough to travel. So that has had a lot of impact, especially in hotels located in cities. So urban hotels, if you really look at the impact on the rates has been significant in urban hotels. Leisure, not that much, although there has been, but not that much. We see certain leisure hotels performing quite well, almost at the same levels to what it was pre-March 2020. Especially destinations that are drive-to destinations. I can give examples of some of our hotels are drive-to destinations such as Shilim, which is near Mumbai. Also destinations such as Goa, which certainly, I think you also mentioned in your analysis, seems to be doing extremely well, and also drive-to destinations in Himachal Pradesh and Uttarakhand.
I'll briefly take a question from the audience because it's related to this. Nancy, Jennifer would like to know, when would corporate travel return?
So like I mentioned, corporate travel started returning, but it's not to the same level. It started with business continuity, teams staying at hotels closer to their workplace. Then essential corporate travel started, but it's not at the same scale as it used to be. Understandably so, people were not feeling safe enough to get on a plane and travel and try to avoid it as much as possible. There would also be budget constraints for corporates to make allowances for travel. So I guess this will take some time. I mean, all of us are looking at this 12 to 24 month of recovery. And I think by the end of that, hopefully we should be back uh, to the same kind of travel for corporate as well.
Right. Okay. How are operators helping hotel owners tide over this period of low demand? We're seeing this question from multiple people in the audience also.
Great question. You see, the interest of operators and hotel owners is the same, which is basically, financially it's all tied in, right? I mean, the higher the sales and profitability of a hotel, the more income it means to the operators. So I think financial interests are pretty tied in. But I think out of this crisis, I would like to uh, put out answers into four broad buckets for this in terms of how operators can help the owners. So I think the first and foremost is to create a safe environment for the guests and associates so that when they come and stay at the hotel, it becomes a preferred place for them to stay. They feel comfortable. Number two is cost mitigation. So each situation, each location, each hotel will require a different strategy, which is so bespoke for that particular operation. in terms of cost mitigation, and I think all operators would be doing so. Third would be really to maximize sales given whatever opportunities are there. And like I've alluded to the fact that some hotels converted rooms to workspaces. Several hotels, as you would have heard of, got into the business of delivering food to the doorstep of their patrons and the local community. So really looking at different ways of maximizing revenues, adding more revenue stream. And lastly, I think doing something for the community where those hotels are located, both in terms of what morally we should be doing and also for the goodwill that is created.
Right. One last question before we move to the audience. You spoke about, of course, what the operators are doing, but that apart, could you share some key learnings from the last 10 months?
Yeah, I mean, there have been several key learnings, but I think I'd like to say that tourism is a key contributor to India's economy, and as we all know, it contributes to over 9% of our country's GDP. And this was already quite significant. And I think what has really come out during the prevailing crisis is that despite all that has happened, I think the industry has made itself even more relevant, not through just the GDP numbers, but through the acts that have been seen across the board. And when I say that, I really mean that hotels have opened doors to stranded guests, to stranded travelers. Hotels have opened doors for quarantine patients and to business continuity team, to healthcare workers, and they've really reached out to the local communities to help, be it distributing food or be it distributing masks made out of linen used at the hotel, and doing whatever it could to really support the efforts of the local governments and the local administration. So it's not just adding to the GDP, but also acting very responsibly towards mitigating this crisis as much as possible.
All right. Okay. Right. Thank you, Mr. Hun. That was a lot of information. It was interesting hearing you speak. Before we move to the audience poll, can I request Anju to take the next poll, please? Anju?
Yes, I'm doing it. Just give me a minute.
Sure. So the question on your screens are, which cities in your view are likely to be healthy performers in FY 2022? Leisure cities like Goa, Kerala and the Golden Triangle. Second, gateway cities like Delhi and the NCR. Third, other tier 1 cities like Bangalore, Hyderabad and Chennai. And finally, religious destinations like Tirupati, Dwarka, Amritsar, etc. While the poll results are being coordinated, let me start with a question for Mr. Ray. Subrito, someone in the audience would like to know ICRA's view on the hospitality and the aviation sector. So hospitality is what we've covered, and on the aviation, if you could help us here.
Yeah, I think if you look at hospitality and aviation, these two sectors, like hospitality, Vinuta has already given in the presentation. The aviation sector also has been badly impacted due to the pandemic, and our outlook for the aviation sector also remains negative. Though this is not the ideal forum to discuss aviation sector, and we'll be having separate webinar. But the problem in the aviation sector, of course, we don't have so many players in that segment, but the problem in the sector is largely, if you look at the aggregate industry level, there is a significant amount of stress on the balance sheet, and we believe in the next 2 to 3 years, certain amount of equity infusion will be required for the industry to kind of improve the credit profile. So overall stress is very high, but at the same time, the debt levels in the industry as an aggregate is extremely high. So the balance sheet is much weaker in that case. And I think it would require a certain amount of equity infusion.
Okay. Thanks, Britu. And we have our poll results also here. So 76% of the audience expects leisure cities like Goa, Kerala, and the Golden Triangle to perform better in FY22. 12% expect religious destinations, 9% other tier 1 cities, and finally only 3% expect gateway cities like Delhi and the NCR. Dhruv, coming back to you on a question again in the audience, the question here is, how do you see gateway cities like the NCR and Mumbai recovering vis-a-vis the overall market?
So this has been a challenge. We have seen that Mumbai, New Delhi, and even cities like Bangalore and Pune have been severely impacted, typically because there is a lot of corporate demand, which is not happening, and there has been really a slowdown in terms of IT-related traffic, and that's why you see Pune and Bangalore to be suffering the most. I think as and when international flights resume, we would see that demand start trickling in back into hotels in the gateway cities. So probably, like I mentioned earlier, that leisure is coming back faster than corporate. So yes, corporate will trail behind this, and unless we see traffic flowing into the airports like it used to be, I think corporate demand would still be a little bit subdued. Having said that, I think whatever is happening is going to be through domestic demand.
Okay. A related question again from the audience. Don't you think the domestic season would be very strong for the next few seasons, as people would not travel overseas initially and stay domestic and save on account of to and fro flight expenses?
Yes, and that's exactly what is happening right now, because a lot of people who would have traveled overseas are not traveling overseas, and that's why you see that drive-to destinations in India and also destinations like Udaipur, Jaipur, Goa, Coorg, like you mentioned earlier in your presentation, are doing extremely well. I mentioned about one of our properties, the Hilton in Shillong, which is outside of Mumbai, tends to do very well. So yes, guests who cannot travel outside the country are more than willing, and there are some willing to travel to destinations within India, and there are some excellent properties in India itself. So I guess if it's a safe journey in your own car to get to that destination and service, those hotels will continue to do well.
Okay. So on that, somebody would like to know if they can understand market performance in two specific markets, which is the Golden Triangle and secondly in Goa.
So out of the Golden Triangle, I think Jaipur seems to be doing well because it's an easy to get to destination for people living in Delhi NCR, and also for, even though the size of the wedding is small, but even for these more intimate kind of weddings, it is doing well. Goa, I understand that flights are quite busy, and hotels seem to be doing very well over the last few months. And even during this festive season, hotels are doing well. So I think from what we gather, these markets, I wouldn't be able to comment much about Agra right now of the Golden Triangle, but demand certainly has been strong for Goa, has been growing for Jaipur for reasons that I mentioned earlier: ease of getting to drive to destinations, and not wanting to travel outside for the lack of being able to travel outside the country. I mean.
Okay. Great. Another question asks, what is the proportion of room inventory geared towards business travels, which business travel, and some specific company specific data, which we will not take on this forum. But Dhruv, if you could help us understand what proportion of room inventory in the country is geared towards business travel.
I would think, without really giving out a number, but I would think that the large, we have about 150,000 branded hotel rooms in India, and I would think a significant majority of those numbers are hotels which are located in key cities, in urban locations. Bangalore itself would have a large number of those rooms. Mumbai, Delhi, Pune. So I don't think it's a very even spread of hotel rooms across resort and urban locations. I think it's more tilted towards urban in our case, and probably that's going to be there may be a little bit of change there, as as we learned in COVID. Resorts are more resilient. They have been faster to come back, and people have been itching to get out of their homes and spend time in a quiet resort with their families. So hopefully we will see more traction in resorts going forward.
By traction, you mean more construction of
Yes,
resort
yes,
properties?
yes.
Okay.
Because it clearly is a segment which has proved to be more resilient than urban hotels.
Right. Another question asks, how are hotels going to cope up with part of the business turning virtual?
I think one of the things we all believe is that people will travel, right? People have traveled for thousands of years, and that's not going to change forever. Of course, we kind of hit an air pocket with this COVID-19, and there has been huge disruption, something that never happened before. But over time, travel has been so important to mankind. It's like eating and sleeping and walking. So people will travel. They'll travel for business. They'll travel for leisure. So yes, it will take some time to get back to normal levels. But even with the tools that are available virtually, like we all are on a Zoom call and other formats of WebEx calls and everything else. And a lot of people have asked me that question, and I think we feel that technology was also available before, right? Even prior to this, there were options to do video conferencing and phone calls. Of course, now people are doing it because there is no choice. But these experiences virtually can never be immersive. You have to travel to Goa to be immersive in Goa. You have to go and have a face-to-face meeting to do an important deal, which is going to be very difficult to do it virtually. So yes, technology will prove to be important where people cannot travel, but uh, people will travel. That's just in the DNA of mankind.
Okay. Another interesting question. Do you think the concept of big Indian weddings will fade away?
Not really. I think right now it's not that people don't want to do big Indian weddings. It's just that they're restricted to do it because of they have to comply with the norms of the local authorities, which is the right thing to do. But again, this is our culture, right? I don't think our culture is going to change significantly. There may be a little bit adjustment to the culture, but I don't think there will be a significant change in the long term. We are all talking about long term here. Obviously, whatever is happening now and will continue for the next year or two would happen. But I think we are all talking about long term. Long term, big events will also happen. Large conventions will also happen. Large weddings will also happen.
Okay, all right. Many hotel chains are going for food delivery, business, etc. businesses. How sustainable are these new ventures when the occupancies come back up?
So, this is very interesting, right? Because most large hotel companies, including luxury brands, were not really delivering food in local communities. And that is something which was, let's call it necessity to do it. And it just proved to be very good. It became a good income stream for hotels. and it also made it more comfortable for patrons to order in instead of taking the risk of going out and eating out where other people are eating. So I think this is here to stay. I think this crisis has just opened up a new opportunity, and this is going to stay. And it's not that hotels have to do it on their own. A lot of hotel companies have tied up with other players like Zomato or Swiggy. Look, as long as it is generating profit, I'm sure hotel companies will continue to do it.
Okay, all right. Another question asks, what are the top 3 markers for resilience for a hotel company to weather the turmoil and turn profitable in 2 to 3 years?
Uh, I think top 3 markets, I would say that.
Dhruv, it's the top 3 markers. So I think kind of like USP is what Mr. Krishnamurthy wants to know.
So could you say that again, the entire question, please?
What in your view are the top 3 markers for resilience for a hotel company to weather the turmoil and get cash positive within 2 to 3 years?
I mean, it'll be hard to kind of, have the same yardstick for across the board, because each is different. But obviously, to answer your question slightly differently, I think the most important thing is to ensure that all the hotels, irrespective of where they are located, should be able to meet their operating costs as much as possible. Obviously, there will be some hotels which are going to be doing exceptionally well because of the fact where they are located. But I think that's the intent, that as far as possible, we are able to cover all our operating costs and to adjust our operating model accordingly. But it's going to be hard to have a similar kind of a yardstick or a benchmark across.
Okay. Do you see any pickup in tier 2 and 3 cities as COVID is more severely impacting the metro cities?
I mean, COVID has actually impacted all the markets, but we have seen in certain tier 2, tier 3 cities where the impact has, at least in demand, has not been as bad. And I can give you an example that we have a hotel in Lucknow, which in terms of demand doesn't seem to be that way off as compared to, let's say, hotels which are located in other metro markets. So again, each secondary and tertiary market has responded differently. But we do believe that there is going to be more potential going forward in tier 2 and 3 markets, and there will be more growth in these markets in terms of new hotel supply.
Okay. Another question, will under construction projects get abandoned or deployed for alternative use? And what percentage of failures do you see? I presume they mean under construction projects which get shelved or abandoned again.
So I think I did allude to this. I think some hotels that may get abandoned or shelved, the plans will get shelved for probably some of those hotels which were not under construction. Maybe they were in the planning stage. Somebody was planning to build a hotel, didn't start building it. COVID-19 happened, and maybe they reassessed and thought, okay, maybe it's not the best time to do it. Let's think it over and revisit that plan in a year from now. Or they said, okay, we are good to go ahead with it. So there will be some dropouts from hotels which were in planning stage. But for hotels which are actively under construction, and I can look at our own pipeline and say that, almost all the hotels that were under construction pre-COVID, all of them are back and they're under construction now. Of course, there have been delays because of lockdowns and labor not being available. But pretty much almost 90% plus of those hotels are back in construction. So I don't think a large number of hotels will get shelved because of this. Yes, there will be some dropouts, understandably so. There could be cash flows issues, or there could be some other issues as a result of COVID-19. But I think majority of what is under construction is the light of day.
Okay. All right. Have management contract signings slowed down?
Yes, it has slowed down, and as one would expect, I think this because, like I mentioned earlier, that most large hotel companies are, either managing hotels or franchising for third-party owners. And when our owners who have other businesses and they have distractions because of the impact of COVID-19, it does have a direct impact on how many new projects we can get in. So yes, it has been a comparatively slower year, and probably it's going to take some time before it gets back to its normal levels. But we did discuss earlier that this is also a good opportunity for conversions, and I think that is something which could come along in times to come. And there are owners who have a long-term view as well, right? Because nobody builds a hotel for 2 years or 5 years. Everybody builds a hotel for 25, 30 years. And for a lot of hotel owners who've been in the business long enough, we all understand that our business is a cyclical business, right? It's never a straight line. It always goes up and down. And for those who've been in business, understand it because we've all been through those highs and lows. So we are always prepared for this. Never prepared for something like what happened this year. I don't think anybody was prepared for something like this, but generally ups and downs and up cycles and down cycles, uh, we kind of are aware of those.
Okay. Can you help segregate the traveler mix in terms of group versus transient, and how was the pricing differential between these? Or also, how much of the occupancy in city hotels was due to group crew travelers, and how much was from high-yielding transient travelers?
Yeah, I may not have data which is so granular, but typically, like I said, group has been very little in terms of its composition in the overall mix, and really, I think the rates have been depressed this year because most of the business that came in for some part of the year were very different segments, like I mentioned earlier. Guests who were quarantined, or travelers coming back through Vande Bharat flights, or frontline healthcare workers. So I think it is a very different sort of a composition. But I think if one was to really look at the broad canvas, the highest paying segment would be leisure in the country at this point in time.
Leisure in cyclical markets or markets with extreme weather conditions, like say in the Rajasthan area, do they also pay more than regular leisure, which is open throughout the year?
Most leisure markets in India they have a high season, and they have a low season, which we call an off-peak season. Pricing is always sort of different. So Rajasthan may have the winters and the summers are slightly differently priced, and it's just the opposite what happens in the hilly areas. So I think it's always been like that. So I think that pricing will continue.
Okay. There's a question on the Northeast market potential and how is it doing? Can it be what Himachal or Uttarakhand was 10 years back?
I mean, Northeast holds a very special place in our hearts, and we belong all wanting, as hotel companies, we've been all wanting to establish more resorts in those locations. They are few, but not as many as we would want. A lot of efforts by the government in terms of promoting the region over the last few years, but sadly, not too many branded hotels have come up. But we do keep reading. Sure, you have as well. That there have been new signings and new developments happening in the region. But I think that destination definitely has a lot of potential, and as an industry, we should really look at growing more brands in that area.
Okay. In case of resorts, there's a question which says a lot of international marriages would get shifted to Indian markets. The question is, how, in your assessment, how big is that opportunity?
I mean, Indian weddings is a huge opportunity. In fact, internationally, if you were to compare, India stands out to be one market where weddings is a very it's a demand segment in its own right, right? Uh, and it is a big opportunity even for hotels located outside. And I think now with these restrictions of people not being able to travel out, of course, these weddings is going to be scaled down in terms of the number of people, but definitely a huge opportunity for hotels in India, both in resorts and as well as in city hotels for this segment.
Okay. We'll take our last question since we're almost out of time now. So the question goes, despite significant distress, we didn't hear of many M&A transactions. Do you believe there is possibility of large M&A in the hospitality industry?
There have been some M&As that have happened over the course of last few years. When all of it is in public domain. And probably there will be some that could happen in the future, but nothing that we are aware of, which is very imminent right now.
Okay. If I may, one last question. This pertains to the cost management. And the question asks if the structural changes in cost management, which are happening during the COVID times, would continue post the COVID scenario, especially in salary costs.
I think whatever adjustments are being made to address the current crisis, right? I mean, we've all heard of across the industry, not just in India, but across the world, salaries have been impacted. Uh, the headcount has been impacted, unfortunately, which is really to weather the crisis, right? So I'm sure that once we are out of this and hotel demand is back to its normal levels, uh, people will be back because they need to serve the customers, and probably salaries will also kind of get adjusted back in the long term.
Okay, all right. Mr. Hoon, that we have a few more questions, but like I said, we're out of time. So I'll close with this. Thank you so much for taking the time out to come on this discussion with us, Mr. Hoon. And
My pleasure.
thank you to the audience for dialing in. Thank you so much.